pick who you want to cut, who's least important to your business. They didn't say, we're cutting these people for you, because they had no idea. And that's what's happening. So we don't know the damage that's going to be done. So that's why I say the best place to be is either in cash, maintaining your portfolio, and even a Meta can be impacted. If the economy does go down, does go lower, we'll see ad spending decline.
Well, you're taking, some more healthcare positioning. You bought more UnitedHealth this morning, which is certainly the big stock story of the day. It's our chart of the day. As the Journal reports, the DOJ is investigating the company's Medicare billing practices. So I'd like to get your thought process on it and show you what the hedge fund manager Bill Ackman posted on X within the last few hours. Says, quote, "My psychological short here is paying off, and I would avoid this stock. When you find two cockroaches, it is almost a certainty that there will be many more. And a $500 billion market cap for a health insurer makes no sense." In the context of this story and all of the activity around this name over the last 3 or 4 months, you continue to buy more. Why?
Well, first of all, Bill's obviously a brilliant investor, but take that for what it's worth. It's worth a tweet that is reactionary, and if he truly had conviction, it wouldn't be a psychological short. It'd be a short in his books because he is a hedge fund.
No, but I know, but the point is, in fairness, though, before you say that, I mean, he has.
It's accurate.
He has. Well, no, not necessarily.
Why could he?
Well, because his strategy has evolved, and he has said that straight up that he doesn't short stocks.
I don't believe
anymore.
He's changed his documents. He can say what he wants, but trust me, if something comes out that's a major
his
short,
actions speak louder than words. Hang on, Jenny. Go ahead.
But the point is that it's not necessarily true what he's saying. Now, why I did it?
Well, there's a lot of risk around this name.
I think you've taken out a lot of the risk right now, near term. Stock traded down over $60 earlier. I bought it down about, I guess about 55 or so. It's been a great trade so far, hurting from the position I had on. But this is a permanent compounder. This is the leading healthcare company in the world. That's why it's at $500 billion, number one. Number two, I mean, if you take a look at what's going on here, and just here's a 30-second summary. The government, Medicaid and Medicare, are pushing to value-based care. So that means they don't want to own the risk. So they're pushing that risk to practitioners. And they say the practitioners, and they figure it out with them, tell me what this patient will cost you to keep in good health. And that's going to drive better outcomes. It's been proven to do that in studies that have been done. And to the extent that you are right in how you're applying care, and the medical loss ratio is lower, can't go below 75%, typically run mid-80s, you can keep the difference. To the extent it goes above that, 100%, then you pay that out of your pocket. So that's what's behind it. So you've incentivized stocks to go ahead and operate this way. It's been a failed experiment with a lot, like Cano went out of business because of it. But the overall point here is that you've got this arms race in terms of coding, how you code these, and that's still very early days. So will there be offenses in coding? Yes. Do I think that this is an endemic issue that the board came out and said to the management team, find ways to rip off the government? Absolutely not. Are there bad players who are incentivized in terms of the individual practices that Optum owns? Sure. No different than what you'd see a regional manager in a bank, in an auto company, anywhere else. So to say this company is just evil to its core is really, really asinine. So that's my view.
All right. Here's a question.
Can I say one thing on it?
Real quick.
Okay. I want to get behind Bill's psychological short because that's where I sit too. And I can't short and I don't run a hedge fund. But as I've mentioned before on UNH, I frequently inherit portfolios with a large, low-cost basis UNH position, and the first thing I do is cut it back. And that's been for years, because for years I've said, at some point this is going to come into the government's crosshairs. Everyone I know who uses it, hates UNH. Whether they should or shouldn't, they do. And it trades at too rich a multiple, I think, for what its future growth rates really are. It's an above-market multiple. It's decent growth, but it's not extraordinary. And I think it's always been in those crosshairs.
It's not above-market multiple anymore. Just factually, it's 15 times this year's earnings, which I would say is well below.
Okay,
exactly.
It's very cheap.
Okay, sorry on that one. Historically, it's been above market multiple.
Can I ask a question? Coca-Cola, their growth is very slow. Pepsi, they're very slow. You know, you take some of those other consumer companies. They trade at a multiple that's a premium to the market for perennially slow growth.
But I think you're talking about different things.
And they're not dominant as they were.
I think until RFK came in for HHS, I don't think that Coke and Pepsi have been in what I've seen for a long time as like right for government crosshairs of looking at the regulations.
That's why you don't invest in healthcare, because you don't know what you don't invest in any pocket of healthcare because of him and because of Trump.
I disagree with that completely. But
where are you safe investing?
It's been for years.
Where are you safe investing in healthcare? Where are you going?
Like Organon, okay, which is the spinoff from Merck, which is long legacy. What am I saying? Like off-patent drugs and like women's health care. Okay, you can be there. You got an 8% yield.
What
it's
if
trading at 3 times earnings?
And says we're 3 times earnings?
Okay, but like let's not go here now. I'm specifically telling you guys for years, every time I get a new portfolio and it has a big UNH position, one of the first things I do is cut it down to size or sell it.
Okay,
that's all I'm saying. So all I'm saying is I hear Bill's psychological
let me just ask a question. When you say you cut it back, is it because it's an oversized position in the portfolio?
Both.
Okay.
If it's super big and the capital gains are too big, then I cut it back. If I can punt the whole position, I've punted the whole position.
Why would you punt the whole position, given what you think? By the way,
because I've always thought that there's government risk in it, that there's political risk in that stock.
Okay.